TV 1061, conceptualizing your ideas across the world and beyond. TV 1061, conceptualizing your
Hello everyone, and welcome to Your Real Estate Tea, where we teach you so you can become educated to achieve. I'm Andrea Farley, real estate broker with Maximum One Realtor Partners. And today we will be discussing credit. This show is dedicated to all things credit related and real estate as well. So if you've ever wanted to know how to gain credit, improve credit, what are the benefits of credit, and how it affects your ability to purchase a home, you definitely want to tune in today. So, just to give you a little bit of background, according to reports, 2020 has shown an increase in the FICO score compared to 2019 for the United States. So, that information, according to the Experian, the generational breakdown of that has definitely shown some information that may be useful. So I'm going to share a slide that shows that breakdown very quickly. And so just to kind of give you all right, let me back it up. The credit scoring shows that between 300 to, I'm sorry, give me 1 second. Let me get that information. Okay, so I'll share that slide with you in just a moment. But here this is showing Generation Z, that's from 18 to 23. Their credit score has increased to 674. The millennials, that age is 24 to 39. Theirs has increased to 680. Generation X, theirs is 699. Baby boomers, 736. And the silent generation is 758. Now, that definitely shows that according to this aging chart or the generational chart, there is definitely a reflection of maybe how age reflects the better credit scoring. And also, we want to look at how we have fared in Georgia. Now, the credit score for the entire United States is actually, the median is 711. In the state of Georgia in 2020, we're shown that it is 689. So, compared to the United States, 689 and 711, there's still, a little bit of work, but we definitely have increased compared to 2019 for the state of Georgia, which shows 682. Now, the FICO score is the most widely used score. It is a model to determine your credit worthiness, and lenders use this information to report your behavior to all the major credit bureaus, which are Equifax, Experian, and TransUnion. And so while they do, we have different bureaus, they all kind of reflect different things. And so now today I do have a special guest. His name is Terrence Smalls. He has a company he will share with us more information about regarding credit repair. And so Terrence, can you introduce yourself and tell us a little bit more about what you do and your company?
Yes. Good afternoon, Andrea. Can you hear me?
I can hear you just fine.
Great. I appreciate that introduction. Again, my name is Terrence Smalls, and I own a company called Good Credit Pros. and I've partnered with Financial Education Services, where we help individuals to increase their credit score, learn about how to increase their credit score, and how to get themselves approved for loans and things of that nature that they may need in the future. Okay. And it's all about education. Here at my company, we've helped thousands of people to get themselves in a better position so that they can buy houses, cars, and, get approved for credit cards and lower their interest rates. So basically here at Good Credit Pros, that's what we do.
Okay. Awesome. Thank you so much for letting us know. That is definitely vital, especially when we are going to just navigate in life. Credit is definitely king. I know that's the cliche saying, but it definitely is, because it determines a lot of what you are able to do and how you can do it. And so, Terrence, I do want to ask you a few questions maybe some people may have regarding credit. So the first question I have is, what is the difference between, your credit score and your FICO score?
Well, basically, your FICO score this day and age is your credit score.
Okay.
Because there are different scoring models, but majority of the United States, majority of companies and, businesses, they use the FICO model. And FICO stands for Fair Isaac Company.
Okay.
So that's where you get the, the initials from. But basically they use it to look at your credit score, to rate you and see how you've done, paying your bills, and, if you handle yourself in a timely fashion. Basically that's what they use. Now there's another one called Vantage Score that is trying to, strengthen their scoring model, but some companies use it. Credit Karma is one of the companies that use your Vantage Score.
Okay.
But when you use a credit monitoring service, you just have to look back and see which scoring model that they use. But for right now, FICO is the best.
Okay. Well, that's good to know. I know we do hear a lot of different things about different models. And so that is good to know that, a little bit about how different companies use it and what they use it for. And so let me ask you this, Terrence, what makes your credit score? What are some of those factors that make up your credit score?
Well, your payment history.
Okay.
Your payment history is very vital. And that's about 35%, if I'm not mistaken.
Okay.
You have inquiries, which is, checking your credit, or utilizing going to different companies and pulling your credit. That makes up approximately about 10%. And then you also have your credit history, which is very important, because the longer your history and the more stable that you show that you have, the stronger your credit is going to be. And then the mix of credit. And when I say about mix of credit, that's you having different trade lines. And trade lines are lines of account that are on your credit, like having a mortgage, having a car note, some credit cards, some loans, and things of that nature. Those are what we consider trade lines.
Okay.
And then, just your overall, payment history, and the companies, they look at that and they combine, put it together to equal up to about 100%. But each category, you want to top out in each category and maximize those particular categories.
Okay. Well, that's great information. So I know I have another question as far as, what are some things you can do to build that, but we'll come back to that. But that is great foundation to know what makes up your credit score. And so when we talk about a good credit rating, what does that actually mean? How is that useful for people to, as far as their credit rating? What does it mean for that, to have a good credit rating?
Well, to have a good credit rating, I really don't like saying this, but it basically tells what kind of person you are when it comes to paying your bill.
Okay.
And I say I really don't like saying that because in life, we have some things that happen that are unfortunate, things that's out of our control. So, it may put you in a position where at a certain point in your life that you may not be able to pay your bills on time. You may have an emergency. You may, fall ill. So I really don't say your credit score is who you are, because bad credit happens to good paying your bills now. And you know, a lot of companies they don't look at it that way. But that's why I'm so glad that credit is something that you can clean up. You know, just in case you had something unfortunate that happens to you. But having a great credit score, it rewards you all kinds of benefits, such as, you know, getting low interest rates, getting approved, and it gives you flexibility to, you know, have bargaining power when it comes time to, you know, certain purchases and things like that.
Absolutely, absolutely, right. And I do understand, and I get it. You know, like Terrence mentioned, life happens, and so it does give credit is one of those things that it can almost seem like it's a little harder to get back up, but it's so easy to drop. But it is possible. And so, you know, Terrence and his company can definitely assist you if that's something that you may struggle with. And so, Terrence, you did touch on some of the benefits of having that good credit rating. Are there any other additional benefits that you wanted to bring up?
Yeah, I like taking advantage of having a great credit score when you walk into a car dealership.
Right.
And you know, most of the time, a car dealership, they want to pull your credit 10, 15 times, giving you all those inquiries.
Right.
And, you know, when you have a great credit score and you know that you've taken care of your credit, you know, you kind of have that S on your chest when you walk into the dealership.
Right.
So, for an example, when I purchased my vehicle, I found a vehicle that I want. I made a phone call, and I told the gentleman, I said, hey, I know my credit score, and I know what I want. I want that particular car. I'm not going to put down any money, and you're only going to pull my credit one time. So he said, okay, you sound pretty confident. I said, yes. And so what he did was took my information. He called me back in 5 minutes, and he said, man, you know your stuff. Yeah, you're going to you've been approved. You're not going to have to put any money down, and your interest rate is 3%.
Wow. That's pretty good. That's definitely pretty good
like
for
that,
a car.
You know, you can take advantage. You can definitely take advantage of.
So you know, credit does give you leverage, you know, when it comes to purchasing, you know, pretty much anything. Just want to say a quick tip for you guys that are looking to purchase a home. You know, Terrence has talked about buying a car. That is something that you want to wait on doing when you're looking to buy real estate. So I just wanted to throw that out there. But again, that information is very important. Knowing what your score is definitely gives you some more ability to negotiate and more leverage. So Terrence, you know, how do you build your score for someone maybe whose score has dropped significantly to that, you know, the poor and the fair level? What are some quick tips to go about building it?
Now, some of the best ways of building this day and age, there's many ways. You can, of course, get a credit card, which is a large trade line.
Okay.
And if your credit is not a position where you can, you know, apply for a credit card and get approved, you can go the route of getting a secured credit card.
Okay.
So, and when I say secured, a lot of people may not know what that means. You can put up a cash amount. You know, you send it into the company, and most companies, they take your cash amount and they put it into a savings account, and whatever the amount that you send in, that's going to be the line of credit that you have on that particular credit card. So let's say you send in $1,000. You have a $1,000 line of credit now with the credit card, and that credit card is going to look like a regular credit card to any, you know, vendor or any store that you go in. They're not going to know that's a secure card.
Okay.
But what you want to do is, you know, be very responsible with it, and you want to keep your, you know, your balances pretty low. Also, you can, you know, obtain building your credit by being an authorized user.
Okay.
To a family or friend that is very responsible with their credit. And when I say authorized user, that means, let's say I have a credit card, and I've had an exceptional history with my credit card. I keep my balances pretty low. Most credit card companies allow you to add a family or a friend to your credit card. Now, that doesn't mean the family or friend is going to receive that credit card if you don't choose for them to have it. But what they will do is pick up your actual history of what your relationship with that credit card company, and it goes to their credit. So in many cases, that can be an instant boost for a lot of people.
Okay.
If you have someone that has an excellent, history. Also, as far as getting secured, you can get a secured loan from your bank.
Okay.
Most of the time, some of your banks do it, but most of the time, a lot of credit unions do it. They give you a secured loan where you put your money up, but they're going to give you a loan for that actual amount of money, and then you just pay it back like normal, like it's a normal loan. And once you pay it back and you build that relationship with that bank or that credit union, of course, that's going to help build your credit, and then that builds your credibility with that particular entity.
Okay.
And then there's a bunch of other ways.
Yeah.
Getting jewelry cards, lines, things of that nature.
Okay. Well, thank you for those tips, Terrence. We're going to take a brief intermission, and we will be right back with more credit tips and information that you don't want to miss out on.
How can you find a reliable source of CBD products? Introducing Holistic Wellness Boutique, a revolutionary collection of CBD tinctures, CBD topicals, CBD edibles, CBD pet products, and other relevant CBD products that help you incorporate CBD into your everyday lifestyle. The best part? Through our special Radiant Transformations program, Dr. Alea Daniel, PharmD, a well-regarded wellness coach, licensed pharmacist, and the mind behind the idea of Holistic Wellness Boutique, will also introduce you to a healthier lifestyle through proper education, nutrition, and a thorough medication evaluation to make the most of our exemplary CBD products. If you are struggling with a chronic condition, we can help you discover how to live a more holistic lifestyle through wellness coaching and the proper selection of hemp-derived CBD products. Visit HolisticWellnessBoutique.com to schedule a consultation or order an audacious combination of hemp-derived CBD products that will rejuvenate your mind, body, and spirit.
Hi, I'm Michael Kyle, your funniest man on the planet, and you're watching TV 1061, your global network. Stay tuned, because that's how they do it over here. Big time party! All right, see y'all later. Bye.
Okay, everyone, thank you so much for coming back with us. Hello, everyone. Thank you so much for joining back with us. Okay, everyone, thank you so much for joining back with us. It's on. Hello. All right, thank you guys so much for joining back with us. Again, I'm Andrea Farley, real estate broker with Maximum One Realtor Partners. So, I have Terrence on the line. He is talking about credit. And so, Terrence, just to continue and get some more questions answered that people may have. So how can good credit help with getting a line of credit?
Well, good credit can help with getting a line of credit by, like we said before, showing your payment history, showing how responsible you are with making payments on time, and things of that nature. It just builds a history for you and lets that particular creditor see, hey, I can extend this person a line of credit because they look pretty responsible. Mm-hmm. And basically that's all having great credit is about.
Right.
And the major key to having great credit, to me, is being able to take advantage of saving money. Because at the end of the day, having a great credit score, allows you to save money.
Absolutely, absolutely. I think that is very key and very vital to know that, unfortunately, poor credit, it reflects maybe your ability and maybe your income levels, but you also end up paying more when your credit is much lower versus someone who has a higher credit rating. It's unfortunate. It can almost seem a little bit backwards, but again, we have to show that the credit worthiness and being responsible with making payments. And so we do have some business owners out there who, maybe need to get a line of credit as well. So how does that impact getting a line of credit for a business loan? And I know we're kind of maybe saying the same thing, but maybe there's something you can add, a tip for a business owner as well.
Yes, as far as a business owner, the fastest way to be able to get a line of credit, and majority of the time, creditors, they look to extend businesses lines of credit, which particularly is like credit cards, store cards, and things of that nature. What they do is initially do a personal line of credit. They pull your credit personally,
Okay.
one time, and if you're credit worthy, they're going to give you that line of credit for your business, which moving forward, it will not tie into your personal line of credit anymore. They just use that credit pull initially just to see if you're credit worthy, and then they're going to separate the two. And the great thing about it is having a business, as an individual, entrepreneurs out there, you can separate the two, your business and your personal line of credit.
Okay.
Which is definitely a benefit.
Absolutely, absolutely. Well, so we talked about a business. So how does credit impact mortgages, and how does it impact when people want to maybe refinance? I know buyers have definitely the number of buyers has definitely increased in 2021 more than it has before. Maybe during those slow peak seasons or those slow seasons. And so the real estate and the mortgage industry has definitely seen an increase. So can we talk about credit and, mortgage loans and also refinance?
Yes, definitely. Having that great credit score when it comes to a mortgage, it allows you to, in a combination with your income, it allows you to buy more house. And what I mean by buy more house, of course, your interest rate is going to be a lot lower. So, your payment, that makes your payment lower. So as you're buying, that amount of house increases, it still helps you out because you're going to have a low payment. And, the creditors, they don't hesitate to extend you credit because you have a great credit score. Now, on the other hand, if you didn't, you would be able to buy less house. And, most people, they want to get the bang for their buck, basically. And then when it comes to refinancing, of course, you want to get the best interest rate that's out in the nation. And right now, we have low interest rates. And I tell all the listeners right now, take advantage of protecting your credit. And if you have any credit, dings, definitely address them, because right now you want to take advantage of the mortgage industry and the real estate industry, because there are a lot of houses out here that are waiting for you to, become that new owner.
Right.
And, having that great credit score is going to lead you to that.
Absolutely, absolutely. I was reading, and I know that the FICO score is what a lot of mortgage, banks and lenders use to be able to determine, how much house you can buy, and even what your interest rate will be on the home. So the better the FICO score is, the better the rate you get. And I know right now the lowest rate for a 30-year fix is about 2.89%, and it's about 2.3 for a 15-year fixed. So, guys, there are slow increases coming, but you definitely want to take advantage of those opportunities. And if right now is not a good time for you because credit has been impacted or credit is a factor for you where it's not so good, take advantage of some of these tips. And, if you have any more questions, you can definitely reach out to Terrence, and he'll provide his information for you when we're done. So I know, Terrence, we talked about how to build credit. Some people have no credit. Is there anything differently that they may need to do for that, or is it pretty much the same?
Actually, it's pretty much the same.
Okay.
But, this day and age, as you stated earlier, a lot of the credit scores are going up. And that's because a lot of people are becoming credit aware. They're becoming aware of how important credit is. And that's great, because that's going to increase, business for a lot of individuals. It's going to increase a lot more house sales. There's a lot of people who want homes, but just didn't know the route to go. So, and then the internet. The internet provides a lot of information to help
Right.
you build your credit. So we went over it, but there's a lot of other things that you can do. And
Absolutely.
at the end of this call, I can give my information, and I'll be glad to give some more tips. There's a lot of information that I did a lot of homework on, and just being a part of my company, I'm going to share that information with all your listeners because it's vital. A lot of people want to get
Absolutely.
to their home, so here to help.
Absolutely. I agree. So let me ask you this, Terrence. Staying on top of credit, is there a particular strategy that you may recommend, for people on how they should monitor their credit? What are some tools and tips they could use to be able to pull their credit score for free and be able to look at, to be able to monitor it? Do you have any additional information for that?
Yes, I do.
Okay.
One of the ways that you can monitor your credit, and it's free, is annualcreditreport.com.
Okay.
They give you the ability to pull your credit and look at it in full detail. And then, like I said, a lot of people are becoming more aware, and not just the individuals themselves, but a lot of companies are becoming more aware. Even your credit card companies, your mortgage companies, they're providing credit monitoring for their members and their customers for free.
Okay.
So, like, if you have cards with Capital One, Chase, American Express, all of these companies allow you to be able to check your credit for free. And not to mention that you have some of the credit monitoring services like Credit Karma, Credit Sesame. The only disadvantage with those particular companies is that they're only going to allow you to monitor 2 of the 3 bureaus. And
Right.
majority of the time it's going to be TransUnion and Equifax.
Okay.
But and then there's also all 3 of the bureaus, they also have services where you can pay that you can monitor all 3. And then they give you tips on how to build your credit, how to watch it. And then those alerts are very important. And I advise that anyone that cares about their credit or looking to build their credit and watch it, use some kind of credit monitoring service because, there's so much identity theft going on nowadays. You want to be able to monitor and make sure that everything is okay with your credit on a daily basis.
Right. Absolutely. And I think we all need to make credit a priority. And so definitely look into those resources so you can get the information. I do want to say, I know Credit Karma is not the final authority on what your credit is, because if you have a lender pull it, it will be different than what Credit Karma has. However, Terrence, it's safe to say that Credit Karma will give you an idea of, what that score is and how you may need to stay on top of things. Is that right?
Yes.
Okay.
Basically, what I use Credit Karma for is just to look at the account
Right.
and the inquiries and things of that nature. I really don't pay attention to the score, and I tell a lot of my customers, don't pay attention to that score because, again, that goes to the Vantage score, which most lenders don't use. They, like you said, they use the FICO score. So you want to really, watch your FICO score.
Okay.
When it's time for you to get, approved for that, get that pre-qualification letter for your mortgage, for your home, then you know exactly what's going on with your credit.
Okay. Excellent tip. And Terrence, the last question that I have is, I know that some people may use a credit union, some people may use a traditional bank. Are there differences in maybe, getting with a mortgage or getting a mortgage, or a refinance when you use a traditional bank or a credit union?
Yes. As far as I'm concerned, and my experiences with my customers and with my, and myself included, credit unions tend to give you a better interest rate, and honestly, they're a little bit more lenient in extending you credit because in order to be a part of a credit union, you have to be, whether you are a worker, you're a part of a union, or you pay like a membership to join that credit union. That gives you the advantage was a little better relationship than, a normal bank.
Okay.
So, and like I said, they tend to have better rates as far as mortgages and refinancing. So I definitely say to everyone that's listening, look to become a part of a credit union. It's definitely going to be a benefit for you.
Okay. All right. Well, that's an excellent tip. And guys, I just want to thank Terrence for joining me today, answering some questions that you may have regarding credit. If you have any additional questions for him, he will leave his information. Terrence, can you please share your contact and how people in the best way to reach you?
Yes, definitely. My full name is Terrence Smalls, and my direct number is 678
Okay.
779-0533, or you can email me at goodcreditpro@gmail.com.
Okay.
And also, if you want to look me up on social media, which is very strong nowadays, Instagram, my name is Terrence T.K. Smalls.
Okay.
Again, Terrence T.K. Smalls. Phone number, once again, is 678-779-0533. And email is goodcreditpro@gmail.com.
Okay.
Andre, I want to say thank you very much for allowing me to spend some time and share some information with your listeners. And I look forward to helping them out. And I know there's a lot of listeners online that want to get that mortgage and be able to buy a home for themselves and their family.
Absolutely. Absolutely. A mortgage is a way to, or home ownership is a way to build wealth, and we have to start with the credit. And so, guys, if that is your goal, your dream, your desire, please reach me at 404-965-5041. My website is dreamrealestate.me. And my email, if you have any questions, is afarleyrealtor@gmail.com. Thank you so much again for tuning into Your Real Estate Tea, where we teach you so you can become educated to achieve. Have a blessed day.